Hello everyone, you're welcome to yet another edition of OS e-learning platform. This is Super Steven taking you through the tutorial of mathematics. But before we start on any discussion today, let's start with a prayer and then we get into the discussion. Father, we bless your name. We thank you for loving us. We thank you for the gift of wisdom, knowledge, and understanding. We thank you for the peace. We thank you for love you've shown us ever since day one. As we are getting into this discussion, Father, we need your guidance. As human beings, we surely have nothing to do unless you guide us. Take us through, give us the strength, the ability, the wisdom, knowledge, and understanding to explore our purpose and heights. Thank you, Jesus. Thank you, Father. All this we pray, believing that all is done. Through Christ we believe. Amen. Can you say amen? At the same time, the Muslims across the world, across Uganda, all pray and believe in the name of Allah. Well, thank you so much. Today we have a simple subject to discuss, and this simple subject is from the theme geometry and measures. Now, geometry and measures, as per the first introduction of these tutorials, we agree that we have very many topics under the theme geometry and measures, and among which we have business arithmetics or business mathematics. And today we are going to exhaustively talk about business arithmetics, the taxation in particular, and we shall get to realize that one of the ways through which the government gets the revenue to fund its services, to fund the local services, the government employees and all that, is through still getting the revenue from the incomes earned by the government employers. And then on the other hand, even the non-government workers are still taxed at this income tax. In other words, from the gross salary, the total amount of money they earn per month, they always chop some fraction, some percentage of money that goes to pay as you earn. Now, we need to get to know how to calculate this as per the topic business arithmetic. And the key things I should highlight here are: 1, gross salary, gross income, the total amount of money the worker is subjected to. If, for example, you get a contract with a certain entity, the government entity, or the non-organization, a school, and you're subjected to pay as you earn. Before you're subjected to that money, you have to get to know the total amount of money you are to earn. Before any deduction is made, the total amount of money you are to earn. Before any subtraction is made on that money. So we shall get to know gross income, gross salary, total salary. Then we need also to know, if just in case that worker is subjected to allowances, we need also to know the total allowances the worker is subjected to. In other words, if you are employed by a company, the company may decide to take up some of the expenses for you, and this may appear in form of money, let's say medical insurance, where you get to the hospital, get treated, but on the insurance payment or the insurance card. So it's the entity you're working with or the organization you're working with that caters for that. So the total allowances sometimes are subjected to the total salary. So we need to deduct that allowance. It is not actually the net income you are to get, no. It is part of the other gross salary, so you need to be careful. The allowances. Just in case someone is subjected to allowances, you need to know how much is spent on allowance. And that can be transport allowance, can be medical allowance, can be life, car or property insurance allowance, can be children allowance, whereby some companies give a children allowance to their respective workers. Food, lunch allowances, depending on the agreement or the strategies or the policies of the organization. So we need to know all that, and you need to be careful while calculating the allowances, because they appear in different aspects, and depending on the setter. So the person trying to put down the scenario or the item generator can decide to generate anything as long as it is within the scope of taxation. So you need to be careful with that. And then you need also to know the taxable income. In other words, well, from the gross salary, there is a certain percentage of money that is to be subjected to taxation. And then that money is called the taxable income, just from the word taxable. So which amount of money are we going to tax? Remember, we do not tax allowances, meaning from the gross salary, you need to deduct that amount of allowance, and then the money you remain with, or the remainder, is the one we shall use as the taxable income. The remaining money is subjected to taxation policy. Now, after you've subjected the remaining money to taxation, it means we need to deduct that income tax. So from the taxable income, after you've known how much is spent on taxation, then you have to subtract how much you've spent on taxation from the taxable income, from the total money you took or the company takes to taxation or subjects to taxation. So now, after subtracting that, you will get what we call the net income, or the take-home income. So that is the exact money. That's why you will get to realize that someone is earning, let's say, 5 million, and by the end of the month, the net income that gets into the account, if this mode of payment through account, the net income is actually not the 5 million as per the contract. So some deductions are made as per the taxable structure, as per the allowances, and by the end of the day, you get realized that you don't receive actually the 5 million net. So let's start with some of these examples, and we see how we can expand our understanding on geometry and measures, and in particular taxation or income tax. And then at the same time, I urge you to contain the knowledge of exchange rates. If you're changing money from one currency to another, you need to have that content. Then the knowledge of percentage, expressing a given value as a percentage, you need to have that knowledge as well. Generally, your mathematics should be at your fingertips. Now, we shall have some 3 trial items, sample items that we have responses, expected responses, and also I will subject you to some trial items as we get to the conclusion of the presentation. Well, to start with, we have this simple item. Mr. Magufuli is a government newly recruited official worker working with Uganda Police. His gross monthly salary is shillings 900,000, which includes the following allowances: water and electricity, they are paying 20,000 shillings. Relief and insurance, shillings 30,000. Housing allowances, shillings 50,000. Medical allowance, shillings 25,000. Transport allowance, shillings 28,000. Marriage allowance, shillings 20,000. And family allowance, shillings 47,000. The day he received his first salary, his wife did not understand why the net income was not actually shillings 900,000. And she thought maybe Mr. Magufuli had spent the money with other women in the bar. His wife threatened to divorce as Magufuli could not explain. As Magufuli could not also explain. The following day, Magufuli traveled to the bank to pay his daughter's school fees. The fees balance required all his net income and to be paid in dollars. Mr. Magufuli happened to meet you in the bank queue and requested you to help him bank the fees. The taxation body in Uganda has its income tax structure shown in the following table. Taxable income per month, we have that shillings. The tax rate is of course in percentage. So from 0 to 50,000, the interest rate is 10. 50 to 110, 20. 110 to 200, 24.5. 200 to 350, 35. 350, 640. And above 600,000, they take 49%. Now, this tax structure keeps on fluctuating as per the actual Uganda Revenue Authority and as per the given financial year. So it is the body that knows how to regulate and how to estimate this taxable income and the rate corresponding rate. Task. As a student who has studied mathematics, business mathematics, determine Mr. Magufuli's net pay. How much is he meant to take home after all the necessary subtractions have been made to the gross salary? Help him to bank the school fees. So in other words, you need to have the knowledge of converting. I can see as shillings and you need to pay the money in dollars. So at some point you need to know on a hint that the exchange rate is $1 matching to 3,840 shillings. Responses. So we need to know the total allowances, just like I told you from the introduction, that you need to know if this person is subjected to total allowances, to any kind of allowance, then we need to know. And we checked very well. The guy has allowances of insurance, relief and insurance, electricity bills, housing allowances, transport, etc. So let's break them down here and you see how much is taken or spent on allowances. Water and electricity, 20,000. Relief and insurance, 30,000. Housing allowance, 50,000. Medical allowance, 25,000. Transport allowance, 28,000. And then marriage allowance, 20,000. So the family allowance also comes in with 47,000. So the total now will be 220,000. So you have to sum up everything as far as allowance is concerned. How do you get the taxable income? We need to get the taxable income. In other words, the amount of money that is to be subjected to taxation. The amount of money that is to be subjected to taxation. So we need to get to know how much is spent on allowance. And we agreed that the total allowance is actually not subjected to taxation. Remember, this total allowance is part of the gross salary. So if you just subject the whole salary to taxation, then you will be subjecting the total allowance to taxation, which is against the principles. So what we shall do is we need to first know how much is to be subjected. How much is to be subjected to taxation? Meaning we need to first subtract our total allowance from the gross salary. So that will be gross income minus total or gross allowances. Gross means total. So the total salary minus total allowance gives us the total amount of money that's to be subjected to taxation. And as per this, the 900,000 minus 220,000, that automatically gives us the amount 680,000. So that will be the money that we shall subject, or that is to be subjected to taxation as per his salary description. Move to the next response continuation. So now we need to know the income tax. How do we get the income tax? Remember, after we've known that we have 680,000 shillings that is to be subjected to tax, then from that money we need to move the actual tax, the actual revenue. Then the balance or the remainder will be the income, or the net income, or the income to take home. So can we get now the income tax from that money? So as per the tax structure, we need to follow each tax rate. So we get to realize that from 0 shilling to 50,000, the rate is 10%. And that is ultimately 10 over 100 times the difference between this, times the difference between the taxable income. Because now here we are considering the range between 0 to 50. So since we can't take 0 or 50, we have to take the difference. That's why we are subtracting here, and this will give us shillings 50,000. Next, we need also to look at the next interval, and that is from 50 to 110. So from 50 to 110, we are still seeing that we can't charge at least 20% on 50, neither can we do it on 110. So but we can only do it in the range. So that's why we are maintaining the subtraction. So 20% is just like having 20 over 100. Simplifying everything, we get 12,000. The next, from 110,000 to 200, 24.5%, and that is giving us, still we maintain the subtraction, and giving us 22,050 shillings. From 20,000 to 350,000, we are still having 35%, and that is giving us 52,500 shillings. Then within the scope or range of 350,000 to 600,000, we have 40%, and that is giving us shillings 100,000. Above 600,000, we shall have 49 9.0. But now this is tricky, that after knowing that we have our taxable income 680,000, we need to task ourselves and ask ourselves in which range of the taxable income. Remember, this is the taxable income. In which range of the taxable income given as per the structure do we find 680,000 shillings? So we start by sampling. Before even getting to the last, you need to sample. If you check in this range, actually this first one, it is actually less. This one still less. This one still less. This one still less. When you get to the second last, well, it is 350 to 600. Still, it is less because this 680. Then there is an opportunity here that they are saying above 600. So meaning that money is 600. This range is like having 600 to 680. So that is that 680,000. So if it was between 350 to 600, then we're made to replace this 600 with that taxable income. So you replace the biggest or the maximum value within the range with the taxable income in the scenario. So the taxable income we have as per this is actually above 600,000. That's why we are taking 600,000 to 680,000. I repeat, if it was maybe 400, then ultimately it would be within the range of 350,000 to 600,000. So we instead replace that taxable income with that money. We replace this 600,000 with the taxable income you've obtained. So that is why we are replacing. Actually, we are not replacing, but we are creating a range that is from 600,000 to the taxable income we have in our calculations. So this will give us 49 out of 100 times the difference of the taxable income we have and the 600,000, giving us 39,200 shillings. So the total income tax will be 230,750 shillings. So that will be the money that will be subjected to tax. Now we get to realize that we need to subtract this money from the taxable income because it is part of the money that is to be taken to, or that is to be paid to the bank or to the Uganda Revenue Authority, for the case of Uganda, as a tax. And this money is not part of the money the worker takes home. Well, now, how do we get the Mr. Magufuli's net pay? So we agreed from the taxable income there is some percentage or there is some amount, some total of income that is spent on tax, and that will be taxable income minus total income tax, or you can say gross salary minus the total of total allowance and total income, which is the same thing. So in this we shall make use of the first one, and at your free time you can also use the second one. I shall use this, or we shall use this first one. So net income is total income. Sorry, this is taxable income, not table income. So it's taxable. So we shall use the taxable income minus taxable income. This is taxable income, please. Let's replace this with taxable. The income that is spent or that is subjected to taxation. So when you subtract this income, called the net income for tax, then that gives us the net income to take home. So using the net income, taxable income minus total income tax, that gives us shillings 680,000 minus 230,750 shillings, and that will give us a total of 449,250 shillings. So remember, we had the 900 at first, as per Magufuli's description of payment. He had 900 gross, the amount of 900k, a gross amount of 900,000. So this 900,000, we get to realize that after all deductions have been made, and that is the allowance, that is the income tax, everything subtracted, we get the 900 dropping to 49,250 shillings. So to a person who may not have this knowledge at first, may not believe that the 900 gross salary is dropping to 449,250 shillings, unless you are explained. So that's why, as per this scenario, to settle the argument in the home, as the wife threatened to divorce, so as a learner or a student of mathematics, called upon to help explain. So you have to explain using the calculations and come up to the gross reduced net income, and that income is, as per this, 449,250 shillings. Well, so part B, the task is helping Magufuli to bank the fees in dollars. So this is knowledge of tax, right? Exchange rate, changing money from one currency to another. So we get to realize that at some point you need to know this exchange rate keeps on changing. You have to be updated, so it keeps on changing. So if it's given in the scenario, use that one, and from this scenario we get to realize $1 is equivalent to $1 is actually equivalent to 3,840 shillings, Uganda shillings. How about 1 Uganda shilling? That will be the reciprocal of that. The division, $1 over 3,840 shillings. Next, how about the Uganda shillings? That is 449,250 shillings, and that will be multiplying the ratio, and this will give us dollars 116.992. So that will be the dollar that we shall pay, or that will help, that will use to help Mr. Magufuli pay in the bank, now that we have this money converted into dollars. Otherwise, if you have any question, somewhere you feel you didn't get it clear, please paste that comment in the comment section. But apparently what we should know is the gross salary We should also be aware of the tax structure, because it must be given, unless you are tasked to generate, but still you can't generate it unless you are given a reference, point of reference, maybe as per the Uganda Revenue Authority, maybe as per any tax structure that is given. So you need to understand that tax structure very well. Then remember, this tax structure is operating on an interval. So we subtract the upper limit minus the lower limit to get the exact amount of money to be projected to that individual income tax rate. Then ultimately, doing the manipulation of data correctly gives you the correct value of the individual income for the, income tax for the individual tax rate and tax structure. Then the total gives us what we call income tax. So that is the money that we shall subtract from the taxable income to give us the net income. Sometimes they ask item takers to express some of this money in a percentage of the gross salary, percentage of a gross. For example, if you are tasked to express the income tax as a percentage, so that one means we shall get this income tax, net income over 100,000, over 900,000. They want you to express his net income as a percentage of gross salary. Then we have to multiply by 100 because we are taking into a percentage. So you need to be careful. What are they requesting you to express as a percentage, and as a percentage of what? So that value they want you to express is taken to be the numerator, then as a percentage of, is it of gross salary, of taxable income, of whatever they're talking about, is the one we take as the denominator. But since we are taking these values as percentages, then we have to multiply by 100. So sometimes the task learners to do that. So that's why I told you at first, knowledge of percentage should be at your fingertips. Let's move to the next item. Next item, still under the theme geometry and measures. Your uncle received shillings 597,000 as a salary and complained of underpayment exhibited in one of the private schools in which he was employed as a teacher at the start of the year. He further says the biggest percentage of his money goes to the government as tax. On acquiring the job, he signed a 3-year contract with the following terms and conditions. 1. A teacher's monthly gross salary income has certain allowances deducted from it before it is subjected to the government income band. So we agreed with that one. You have the total gross salary, but that money is subjected to some allowances and they have to remove it. And remember, the rule is you can't tax allowance. And since the allowance is part of the gross salary, so we have to remove first that allowance, then the balance or the remainder is the one we shall deduct or subject to taxation. So the allowances as below. Marriage teacher is to earn 18,000 per month. Unmarried 12,000 per month. Each child below 11 years 5 per month, 5k per month. Each child above 11 years but below 18 years. Be careful with these allowances. The conditions attached to the allowances, be careful. 7,000 per month. You're seeing per month. Sometimes they may trick you and they tell you per week, per day, per hour, depending, and you need to know for how long. Each lesson taught shillings 3k. Each examination invigilated shillings 5k. Meeting allowance shillings 50k per meeting. Housing allowance shillings 240,000 per month. Lunch allowance shillings 20 20 per day. Then the government income tax band. Here is the income tax band. The income tax band is there. Now, before we continue, I want us to make a highlight on this. Remember, this salary is per month, and the allowances should be also per month. So this one we are safe, it is per month. Even the unmarried is per month. Children is per month, per month, per month. The lesson taught, okay, it will depend on the instruction. Then the meeting allowance is per meeting. Of course, if they had one meeting that very month, then you need to be careful as well. This housing allowance is per month. Then lunch allowance is per day. So you need to be careful per day. And if that month is specific, the month he received this money, then you need to know how many days are in that particular month. So before we continue, that is what we should put at the fingertips and get to know. Everything should be very, very clear. Very, very clear. Your uncle earns a monthly gross pay of shillings 1,240,000. He is married with 3 children of age 10, 15, and 19. Given that he has 64 lessons taught in a month, you see, so the lessons, they are charging the other money. But again, he had 64 lessons in a month, attended beginning of term staff meeting, and this is of course for that very month, and invigilated 5 examination sessions. Hint, a month has 30 days. So this is crucial, very, very crucial, the 30 days. Task: help him find how much money and its percentage he pays to the government as tax. Establish the take-home pay or the net income. Your uncle, this is not your brother, your uncle, help him estimate how much is to take home. How much your uncle is to take home. How much your uncle is to take home, and advise if there could be something wrong with his payment transaction. Responses now. Let's dive into the responses now. The marriage allowance, since the teacher is married, he is married, yes, so he gets shillings that. Remember, he's not married, that's why I used the red. It's not, so we shall not consider that money. Each child below 11 years, remember he has one child that is below 11 years and taking 5K. Each child above 11 years but below still has one child who is 15 years old and taking 7K. Each lesson taught is that money, but he taught 64 lessons in that month, so we have to multiply times each lesson, cost per lesson or the price per lesson. Examination invigilated 50, and this person in that month had 5 examination sessions. Meeting allowances, we have 50,000 per meeting, and he had one meeting attended at the beginning. Housing allowance, of course we had this per month, so we just get into per month and substitute, that is 240,000. Lunch allowance per day, so since there are 30 days, are you saying 30 days? So we shall have that money, and the total allowance will actually get into shillings after summing up everything. After summing up everything, what I mean is summing up the total allowance. So since the teacher is married, so I will exclude, or shall exclude the unmarried allowance. So you can't be married and unmarried at the same time. So that's why I am putting red on this. In other words, I'm even crossing it. So now the total allowance, the money that is not to be subjected to tax from the gross, is this money. That is 597,000 Uganda shillings. Well, so that is the money that we need to subtract from the gross, such that the balance, or what we remain with, is to be projected to taxation. So the taxable income now, which money should we take to taxation deduction? That's gross income minus total allowance, and that will be 1,240,000 minus shillings 597,000, and this will give us a gross amount of 643,000 shillings. Okay. So we need to get now the income tax. From the taxable income, which amount of money should the government remove, should the government deduct, such that we remain with a balance that is to be subjected or projected to the bank account as the take home or the net pay. So for that range, we get to realize that we have that, as we agreed in the first item, that we need to take the difference and as per the percentage. The second range, we have that money, that is 25,000. Third, 30,000. Fourth, we have 45,000. And now, since our money is 400 and above, then it is not within the scope of this fourth. So we get to 400 and above. So that's why we are including it. We are including it to be within this. So it is meant to be, now this range, it's meant to be 400 to 643. 400 to 643,000, 400,000 to 643, because this is the taxable income. So that's why 400 and above is satisfying the taxable income. So that's why it is satisfying the taxable income. So for that, we shall get a gross total of Uganda shillings 231,500. And that is the money that we shall deduct from the 643,000, which is the taxable income. And the balance will be the net pay. How much money, and it is percentage he pays to the government as tax. So his pay is that net income pay. And now, since that is the net income tax, we need to get, okay, the scenario is tricky here. First check, they want us to get how much he pays to tax, not how much he takes home. So that is the net income. So that's why we shall have this net income tax as the money he pays to tax. Now we need to express that very money as a percentage of the total, and that's why we said that value they want you to express is the numerator, and as a percentage of what? Is it a percentage of gross, percentage of taxable, percentage of what? So here as a percentage of the total salary, then times 100, and it's giving us 1.89%. So be careful here, they actually never wanted us to express the net income, rather they wanted us to express the income tax he pays to the government. So you need to be careful with that. We need to be careful with the scenarios. So now we need to get the net income, take home. We agree that is the difference between taxable income and total income tax. So we shall get Uganda shillings 643,000 minus 31,500 shillings, and this will give us 411,500 shillings, and that will be the take home. Take home. That will be the take home or the net pay. Well, let's get into item 3. And I want you to be careful with this item. For this one, we shall not have the range for the taxable income, but rather we shall have the exact money they are subjecting to tax as per the tax rate. So Musa, a manager of a certain organization, earns shillings 4.5 million. That is 4,500,000 per month, 4.5 million per month. His gross income includes tax-free allowance. Tax-free. Tax-free means no tax is subjected to allowances. We do not deduct any tax from allowance. And this tax-free allowance is 1 million. Mind you, you may not receive this money hard cash unless the policy is they are giving you house allowance hard money, but in most cases they give you the services. If it is insurance, they give you the card. You get into the hospital and get the services, and all the money is deducted from the card. So in most cases, however, when it comes to some of these hard cash allowances, then still you can receive the hard cash. The rest of the income is subjected to an income tax, which is determined as follows. So the structure is here. 8.5% of the first 1 million. If from this, of course, we need to get the taxable income, the gross minus the allowance. That taxable income, the first amount, the 1 million from that taxable income, that person is almost is subjected to 8.5% tax. Then 12.5% is on the next 800. So you will get to realize that here, as if the money is reducing, the taxable income is reducing, and as if the income tax is increasing. Well, what is clear here is that, remember, this money is increasing. So if at first you're getting 1 million, then the taxes are relatively 8.5. But as you increase this amount to another 800,000, meaning by then you'll be adding 1.8 million. So you expect your taxable income rate to increase. So, however, we shall be charging the next 800 you are topping on to 1 million. So we shall not charge the total of 1 million. Rather, we shall charge the tax rate on the 800 you are topping on. So that money that keeps on adding. For example, if they increase your salary from 1 million and probably we get maybe 500 as the money subjected to taxation. Now any increase, let's say from the 500, then we need like 200 as the first initial taxable income. Then when we increase any money on 200, maybe another 100. So the tax keeps on increasing on the added money. So that's why we are saying on the next Uganda shillings 800, as per this scenario, 12.5% is chopped. The next 20 is on the next 600, meaning that person will be earning or will be having a gross taxable income of about 2.4. Yes, so that's why it is increasing. 250, I mean 25% is on the next 500, 35% is on the next 300, and then 45.5 is on the next 200. 55 is on the remainder. Now, if you add, I told you this is accumulated gross for accumulated amount for taxable income. So if you add this money, then you get its total, subtract from the taxable income we shall get after subtracting gross from, a total allowance from the gross. So if you get that money, which is the taxable incomes, minus the total we have in this tax structure, then the balance gives us the remainder. So we need to get that one, the remainder. The remainder that is taking 55%. Okay, Musa wants to know the net amount that he remains with in order to save 25% of his money every month in his other bank account for 2 years. The bank he considers gives a compound monthly interest of 18.4%. So the knowledge of interest rate should come here, compound interest. How do we calculate compound interest? That formula should be at your fingertips. Okay. So now let's get into the task. As one of the employers in the finance department in the same organization, present a clear and detailed layout that shows the net income Musa receives at the end of the month. In other words, they want you to display the calculations of the net income, right from the taxable income, how we get it, given that we have the total income, so total allowances, we have the total or gross salary, then we can get into this and find the net income. Part B, help him ascertain the accumulated amount he shall have in the savings account. Well, responses now. Let's dive into this fast, very fast. Total allowances is shillings 1 million. The gross salary we agreed, that's 4.5 million. So taxable income as usual, the difference between gross and total allowance, and that will give us this amount of money. That will give us 3,500,000. So from the 4.5, actually they are removing allowance of 1 million, and the remaining money is to be subjected to taxation. So they are going to remove a tax from this. Then after removing a tax from this, the balance is what we call the take home. Tax rate, here we have taxable income as usual. Then tax rates, the first Uganda shillings that we are substituting there. So you are seeing that here we are not actually taking the difference, and where would you get even the difference? So we are getting into direct money. So on this 1 million, they are actually taking 8.5%, and that will give us this money, 85k. On the next 800, so we are charging that proportion increase, that exact value that is increasing, because it's the one that is causing the lump sum taxable income to increase. Since the first 1 million suffered the taxation, then we shall not add 1 million plus 800. Again, we subject it to 12.5. That will be a repetition. In other words, you will be subjecting 1 million to taxation twice, and that is 8.5 and also 12.5. So since you've subjected 1 million to 8.5, any increase to that 1 million becomes or is subjected to another taxation or tax rate. So that's why we are getting 100,000 for the next. For the next as well, that's the next 600, we get 120k. Next, we get 125,000. Next, we get 105,000. The next 200, we get 91,000. Then the remainder. So we agreed that the remainder is getting the difference between, after knowing this total, it is this total. Remember, there is our total taxable income. So we get total taxable income minus the total taxable income that was subjected to, that has been already subjected to taxation. Remember, this taxable income total has not been subjected to taxation, but we have the other part that is already taxed. So to get the remaining money from the taxable income that we need also subject to the taxes, to the tax of a tax rate 55%, we have to subtract that. So the total of this money is actually 3.4 million. 3,400,000. So the difference gives us the money that we shall subject to 55%, and that money will give us a total of 55,000. So we need to take note of that. From the taxable income, some money will be subjected to tax, and as you get into the process, you'll be having a remainder, and that remainder should also be subjected to a tax. So you need to take the difference. So the total income tax here will be 681,000 shillings, 681,000. So part A, Musa's net income at the end of the month will be taxable income minus total income tax, and this will be 3,500,000. 3,500,000 minus 681,000, and this will give us 2 million. This will give us 2,819,000. So a person who had already 4 million at first, actually 4.5 million, has been subjected to allowances. 4.5 million has been subjected to allowances, deduction, and also been subjected to taxation. So the 4.5 is now turning to, the 4.5 is turning to what? To 2 million. It's turning to 2,819,000. So that is the total take-home money Musa will have at the end of the month. So let's calculate the compound interest. In other words, the amount he will have, after saving for 2 years, given that he wants to take actually 25% of this, his gross, his net income. He wants to save 25% in the bank, but the bank he's considering gives an interest rate of 18.4%, and this interest rate is actually a compound interest. So we shall use, just in case we are requested to find compound interest, we shall get to find that one also here, but here we just need to get the amount. So he wants to save 25% for 2 years, and the interest rate is 18.4%. Musa's amount after 2 years. 2 years we have 24 months. So we need to know that this is acting per month, every month. So we need to convert years into months, and 1 year has 12, then since there are 2 times 2, that is 24. So the formula is very simple here. We have that formula. The formula is very simple. Sorry for that. formula is very simple. We shall have principal into 1 plus r over 100 power n. So we shall make use of this formula to calculate the amount. Principal is 25% of his monthly net income. So 25% of that. So we shall get it from this. That's the principal. And the principal now will be 750 shillings. That is the principal. Then the number of time or period will be 24 months. Then the interest rate is 18.4%. We need to substitute in our formula. That will be the principal into 1 plus the interest rate out of 100 times the number of, the number of months, and that will give us 40,595,317.445 shillings. So that will be the money Musa will have after 2 years. System. So kindly go through these scenarios very fast. Note them and try them out. If you feel you've learned something, try to use this. So that is our item 1. Take your time, read the scenario and understand the scenario. So that's